Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about MYT, so Urban Tea and Corporations. I'm going to go through technical analysis, news, and everything I can get my hands on, and anything I can get my hands on for this company. And then I'm going to be addressing how I'm going to be playing this stock. So without further ado, let's make sure to drop a like to this video, subscribe, and leave your notifications on to get the latest out of these videos. So first things first, you get to see here on the MACD, it does look like it might actually have bottomed down. It seems that they might be attempting a reversal on the 20th of August as the highest, or sorry, the lowest point of the histogram. But that attempt of reversal before has been seen here, and you go on all the way, has been seen here. And you get to see that the stock seems to have always been trying to attempt a reversal, getting a little bit green and then dipping. A little bit green and dipping. And it seems to be a little bit of a very horrible trend that this stock is following. ADX shows in a sloppy movement. Willing percent R is oversold, and momentum seems to, as it is still negative, the stock seems to be not gaining that much momentum to shift it up in a positive way. Now, moving averages are really bearish, and you get to see 30 EMA is above 10 SMA, so that's a bearish sign. The stock price is below the trading action zone. It's below the 200 SMA and the 50 SMA, and you get to see that the 50 SMA is curving down towards the 200 SMA. That is a bearish sign, and it might actually form a Death Star sometime, maybe not next Monday, sorry, not next week, maybe Monday of the week after. It takes some time, it depends as well on the movement, but a Death Star is really close to this one. Now moving on towards moving average bands. Doesn't signify anything, but just for the sake of it, it's between 37 and 45, but you get to see it's dipping quite fast anyway. Now going on towards the charts, you get to see it is bottoming down. It looks like it's very close to its 52-week point, very close to the March drops. Now, the most significant thing we're seeing here is the supports and resistances, and I'm going to go back all the way back to March. You get to see the next significant resistance is a 40. The current significant support is at 29 cents. So the next resistance significant one is a 40, 50, I see 53, let's say 57, 60, and then 65, and then 70. Now on the Fibonacci retracements, just to try to cover all the bands on there, 56, what I'm going to do is I'm going to shift it down quite a bit. Rarely ever do this. 38 would be another one, just for the sake of Fibonacci retracement, but very low significance in this. Now moving on towards 1 hour perspective, just to try to determine if there's any trends or any kind of patterns that could be recognized. Up is just a drop, accumulation, drop, and then just continuous drop. So I'm gonna go through news now. Before moving on to there, I'm just gonna go through one of the latest news. All right, so they do have one of the things here. This is just an inspection thing way back below. Okay, New York location being open. That is something significant. Although in a part where there's pandemic, there's higher unemployment, but New York real estate, for instance, is hit hard. But hey, now they have a New York location, so that is something nice. It hit the US market. Now institutional values, nothing significant here. We get to see that there is an institutional purchase on the 20th. That's around 3% ownership from L1. On the 5th, an 8% ownership, and on the 14th you get to see HRT Financial bought around 73,000 shares. It's nothing significant, but there is just a bit more institutional interest than it was before. Now going on to one thing that I've really dug through, and this is one of the important things that I consider a lot of people tend to forget in penny stocks or low cap stocks, or stocks trading below $1, is compliance. How long do they have until they reach compliance? Now, I've dug quite a bit of different SEC filings. I've gone through like the entire list, clicked every single one, so in case I missed something, make sure you mention that in the comments below. But here's the thing that is significant. On last year, they received a letter of compliance suggesting that, you know, they could face possible delisting. And so they did have until I believe July 3rd to gain compliance. Of course, that is not met. They have until September 19th to regain compliance. If the company does not regain compliance by September 17th, it could face delisting. And so, what are some of the possible things that they can do in order to regain compliance and get to above dollar? Right. Keep in mind September 17th. So September 17th, and we're gonna count 10 business days before then. So that makes it 10th, 3rd. So by September 2nd, they need to hit there, and that is only a little bit over a week. And you gotta, yeah, so a little bit over a week. So what are some of the options they can do? One, they can turn to pharma, become a, start doing vaccines. I'm just kidding. One of them would be having some kind of a breakthrough, acquisition, new locations, and requires a lot of capital. So that is really a bit out of the window. Although they do have offerings almost every month, so they do have capital for such thing, but it takes a lot of work. Second one would be consolidating shares / reverse split. That is a high chance, right? You're thinking about it, and hey, that sounds like an easier way out, and that would be the most likely chance, right? That would be the most likely kind of thing where you're considering it's reverse split incoming, and that is one thing that really concerns me, and I think that's the easiest thing that they're gonna go for. So what am I gonna do with this stock? It's a stock that I would really not like holding right now. Chances are it's going to be a reverse split sooner or later. It's a tea company in a time where unemployment is higher, or a time where people don't know their security, but a time where a lot of commuters aren't commuting anymore because we're facing a little bit more off online working and distance working. I would definitely consider selling the stock and passing in. But when it comes from a technical analysis point of view, this stock has potential when it comes in just because of the bottom up chart. But on the technical analysis point of view, it has a high risk with Death Star and all coming in. The stock a little bit leaves a sour taste in my mouth that I don't want to touch it. Now, someone could be like, all right, but you get to see just off the bat that the chart before even the offering was trading at 44 cents. And before then, it was even trading at at very close to 50 cents. So, Ed, that's a 100% increase almost. I agree with you, but there's always a risk tolerance that you need to consider. And as I mentioned, the risk would be a reverse split. It could be delisting, and the reward would be higher price. Now, look back to their offerings. They do have a kind of a behavior of repetitive offerings. What do you think about the sticker? Make sure you mention down in the comments below. Share, subscribe, and like. You have a wonderful day.